What's up, everybody? Nate here. So after the pandemic started back in March of 2020, and after the stock market immediately crashed, investors and Americans were kind of concerned that we were going to be running into poor economic conditions for a very long time, except the exact opposite happened in the United States. I mean, sure, the United States entered a recession for a very short period of time in 2020, but 2021 ended up being the year of record highs. The asset market, like Bitcoin, other cryptocurrencies, the stock market, commodities, and the housing market all set brand new record highs in 2021. Our economy was booming, with GDP essentially rebounding directly after the 2020 pandemic. But now, in 2022, everything is coming back down, with many investors and Americans worried that we could see a major recession this year alone. Everything in our economy is connected in one way or another. So today I want to talk about how the housing market, the stock market, and the cryptocurrency market essentially coming down is a bigger sign of things to come in the United States, and what this is all going to mean for the future of our economy in not only 2022, but in 2023 and beyond. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now I want to talk about what investors are calling the everything crash. Because everything went up in 2021 and reached record highs, it's now all starting to come back down to reality. The first thing I want to talk about is the stock market. The stock market in 2022 has done nothing but go down, as the Dow, S&P 500, and NASDAQ are even starting to see their worst days since the pandemic of 2020. This is all because, one, earnings reports. Businesses on the New York Stock Exchange are reporting terrible earnings reports right now. Mostly, they're bringing in less revenue. This is because they have higher costs and Americans are spending a lot less right now. And that problem is pretty twofold, because Americans are battling inflation just as much as the Federal Reserve is and businesses. Inflation hit an over 40-year high of around 8.3% back in April of 2022. This means that the average price of all of our goods and services is rising at a rate of around 8.3%, which doesn't sound like a lot, but over time, this means Americans pay a lot more for all of their goods and services. It also means that the buying power and the value of every dollar that you have suddenly starts going down. So now you don't have as much money as you think you do. So how exactly does that affect the stock market? Well, the stock market is made up of a bunch of different businesses and companies. These businesses and companies are going to be seen as valuable or not valuable depending on their technology, depending on their business, and more importantly, depending on their sales. We are just now starting to get the earnings reports for major companies on the New York Stock Exchange. This is all reporting numbers from the first 3 months of 2022. At the beginning of this year, many of these same companies were reporting really good earnings. They were reporting earnings from Q4 of 2021 when we were in a holiday season and Americans were still spending at record rates. And inflation was a lot lower than it was at the start of Q2. So there wasn't as much pressure on Americans. This big inflation problem has been an issue for a long time in the United States, but it didn't really start until about the summer of 2021. So inflation at that point was only going on for about 6 months. Now it's been going on for nearly a year. And what exactly have all of these earnings reports said? Well, most of these earnings reports that have come out are starting to show that sales are going down. Costs for businesses are going up, and the production rate from their employees is also decreasing. Part of the reason for that is because of supply chain issues all throughout the world. The United States has faced supply chain issues since the start of the pandemic because so many businesses shut down, and basically the entire world shut down. So businesses got really behind because they couldn't get any of the things that they needed to produce goods and services here at home. This meant that the prices for everything had to start going up because demand was rising, but supply was steadily dropping. On the last GDP report for the United States, GDP essentially fell by 1.4%, and the biggest reason for that is because companies were starting to build on their supply of things. They're starting to grow their production, and they're starting to get a lot more things from overseas and just making more here at home. They are adding to their inventory so that they can have enough things for Americans to finally currently buy. So that explains the cost part of the equation, but then you have the lower productivity and you also have inflation putting pressure on Americans. Inflation in general is very high right now, and Americans are not making enough in order to buy more things. In April of 2022, the Consumer Sentiment Index from the University of Michigan actually steadily dropped, meaning that consumers are having a really hard time believing that they're going to be able to go out and spend, and they really want to do more saving right now than they want to go out and buy things. And companies are starting to report that consumers are not buying as much right now because prices are high and the shelves are not always full, so when they go to the store, they're not able to buy anything. That's because of the supply chain issues as well, which is expected to get better by the end of 2022 and into 2023, but in the meantime, Americans have really high inflation that they have to deal with. And now we're starting to have company after company report terrible earnings on the New York Stock Exchange. We're talking your major tech giants like Amazon and Google. We're also talking about your staple consumer stores like Target and Walmart. All of these businesses are not making as much money, and you need more money when you have periods of high inflation. So we are reaching a point in the United States where this is becoming a big problem, and that is causing the stock market to crash completely. Investors are pulling their money out of the New York Stock Exchange and they're moving it around. They're either taking it to other markets or they're putting it into some smaller stocks. That means your big companies, your companies like Amazon, who hold $1 trillion worth of market cap on the New York Stock Exchange, are starting to lose a lot of that value, which means the entire stock market in general is going down because most of your major players are going down. And of course, we have the Federal Reserve starting to raise interest rates and pulling a lot of their money from the New York Stock Exchange. They issued a multi-trillion-dollar bond buying program at the beginning of the pandemic back in 2020. This was supposed to prop the stock market up and get it out of that major crash, which it did. However, this process has gone on for a very long time and has pumped so many hundreds of billions of dollars into the stock market every single month. That is money that big corporations could then go out and use and invest in risky assets like unproven tech companies or just anything that they want to. That money, as of May 2022, has completely stopped flowing into the stock market though, because the Fed has realized that that is only increasing inflation even more. I mean, the more money that you print and the more money that is in circulation, the higher inflation you're going to have because demand is going to be high. The more money that the United States government prints, the more money is sent out. That means people have more money, and when people have more money, they tend to spend it. As people spend a lot more money though, that means businesses have to produce more, running into supply chain issues, and if businesses can't keep enough supply on the shelves, well, now you have high inflation. And that is never going to go down because demand typically doesn't diminish all that much. It pretty much stays at that same level. The Federal Reserve just wants price stability, which is why they're pulling that money. And they're also raising interest rates. Back in March of 2020, they lowered their interest rates down to 0% because we weren't sure what was going to happen with the pandemic. People weren't working. Businesses weren't going to be getting much money, so that meant that there wasn't going to be any money floating around our economy. That is a big problem because 70% of our GDP in our economy relies on consumer spending. So if you don't have that, then your economy essentially fails. And with demand coming down for everything, well, regular everyday Americans and investors can no longer take on risky investments or risky assets. Americans can only once again buy what they can afford, which means the stock market and the housing market are immediately going to be affected because there's a lot less liquidity in those markets. Liquidity just means cash. How much cash do you have on hand? And there's not much to go around right now because nobody is investing. So the stock market is tanking, and we can probably expect it to continue to fall for the foreseeable future as more and more companies start to put out really bad earnings reports. They're going to show that costs are going up and sales are going down. And part of the reason why people are expecting a recession and for this to continue is because all of your business heads and your CEOs are expecting and putting out guidance for the rest of 2022 that this process is going to continue. They expect to continue to see lower sales for the future. That, along with consumer sentiment going down, is not good because you have higher interest rates and demand is coming down. People don't want to spend any money. And at the same time, you literally have companies that are starting to fail. That all kind of goes hand in hand with the cryptocurrency market because the similar thing was happening with crypto. Cryptos, especially like Bitcoin, are seen as a hedge against inflation. A hedge is something that can protect you during times of a crash or high inflationary periods in the United States or across the world. Basically, you put your money into an asset that is going to continue to gain value when something else is losing value. So investors in 2020 and in 2021 have put billions of dollars into the cryptocurrency market because they're hoping that it would protect them. But this industry is highly volatile, and because so many brand new investors have entered the space, well, this has meant traditional investors are now there, and they are starting to treat this market like they do the stock market. Crypto has also gone way down in 2022, losing over 50% of its value after setting record highs back in November of 2021. There is a lot less liquidity, and higher interest rates means investors can no longer put their money into those assets without taking on a lot of risk. And not to mention that there is a possibility that inflation might be going down in the United States, as there was a slight drop in core and headline inflation from March of 2022 to April. This means that if inflation is starting to go down, well, there might not be a full reason for you to have that much crypto in your portfolio. It's the exact same thing of when the stock market crashes, investors turn to commodities like gold, silver, and copper. The reason is because those assets have universal value and they take time, money, and energy to actually create. So they're going to have value all throughout the world. And even when the stock market is crashing or when you're in a recession, they're going to continue to gain in value. But if everything is great in your economy, then there might not be all that much reason to have that much gold. And the same can be said for Bitcoin, according to some investors. And then finally, we have the housing market starting to cool off all throughout the United States. Sales of existing homes have reached their lowest levels since the pandemic began. Interest rates are reaching levels higher than what we saw before March of 2020, and inventory is at a record low. Now, inventory being at a record low and demand staying high means that we're not going to see a crash in the housing market anytime soon. However, with inflation continuing to build and the price of everything going up, well, Americans are getting their budgets stretched, and many of them stretched to buy a house in the first place. Now, I don't have to tell you that the cost of a home goes up every single year. You have your mortgage payment that could go up depending on if you have an adjustable interest rate or not. And then, of course, you have taxes. You have to pay property taxes every single year. And if the value of other homes in your area are selling for high, then your home is going to be assessed at a higher value, and bingo, you have higher taxes to pay. A lot of Americans could afford their homes in the beginning when they first got their mortgage, when they first signed for it, but a few years after that, well, taxes are going up, and so is the cost of everything, and if their wages haven't gone up too, then we could be facing a foreclosure crisis in the United States. Millions of Americans now unable to afford their homes. And that really just depends on how long this whole housing market boom goes on for and how long inflation stays super high. If inflation comes back down because we have less supply chain issues, Americans start buying a lot more again, and our labor market cools off, then you could probably see the housing market also go back to regular levels. But that is a big if, because the supply chain issues that we're facing in 2022 are not going to go away like that. The Federal Reserve and the United States federal government and these businesses have no control over what goes on overseas. Right now, we have serious lockdowns in China, and we still have the war between Russia and Ukraine. That is causing energy prices to go up. That is causing consumer prices for goods to go up as well. But the overall biggest thing here that you can take away from this entire video and why investors are worried that everything is going to crash in the near term is because of consumers. Consumers in our economy run everything. If nobody is buying anything, well, there is a reason for that, and the reason is they don't have enough money. This means businesses have to take on additional costs and start paying people a lot more. That only makes inflation go up though, which is exactly why the Federal Reserve is calling for a hiring freeze right now. They don't want businesses to hire people at super high wages because this has been a problem because of the Great Resignation since about the middle parts of of 2021. Millions of Americans have quit their jobs for a lot of different reasons, but every time they job hop, they want better pay. Businesses in 2021 were willing to give out that higher pay because consumers were still buying a good amount of their things, but now they can't afford to do both. But they kind of still have to try to hire more people and to get more people to work for them because they have to solve these supply chain issues. If they can't have any productivity, well, then you're not going to be able to make anything and your business is going to go under. And unfortunately, there really isn't a big fix for this because the Federal Reserve, for a lot of investors, is way behind the curve when it comes to inflation. They should have raised interest rates a lot higher by now, and now they're getting way too aggressive, which means too much demand is going to come out of our economy, and Americans are going to do a lot less spending. They're going to do a lot less travel. They're going to do a whole lot less investing, which means the housing market is going to go down because nobody can afford a house, and the houses that are on the market, nobody wants to buy them because they simply can't afford it. The majority of Americans are not going to have extra money to invest, which means no liquidity for the stock market, and tech companies rely on that extra liquidity to survive because they don't have a lot of sales. It's part of the reason why they're going down. And your other companies need to make sales too, and they're taking on a lot of additional costs in order to get that done, but it's not coming out the other side just yet with consumers starting to buy their things. This ultimately could be leading to a crash in the stock market where now businesses are not making any money and they're starting to fail. Nobody's putting their money in there, so the stock market immediately goes down. Same with the housing market and same with Bitcoin and other cryptocurrencies. Now, here is kind of the upside to all of this. We saw record highs in everything in 2021, and when there is record highs of everything and investors see a whole lot of money going in, they tend to get really greedy and they tend to start making some really risky investments. Things are looking really good, so they start doubling down. They start investing in tech IPOs that haven't made any money. They start buying treasury notes and corporate bonds and mortgage-backed securities because the mortgage-backed security market is all secure as long as people continue to pay their mortgage. They get really risky because there's so much money. This means that so many bad assets that don't really have any stability start popping up. Well, all of those in 2022 and into 2023 are about to disappear. That's right, all of your bad companies, all of your tech IPOs that don't have a good business model and don't have a good sales model or a structure to their business at all are eventually going to fail. Investor interest is not enough to keep them alive anymore, not in times when we're talking about a recession. Investors are going to go into stable assets. They're going to go into your blue chip stocks that continue to make money no matter what is going on. That means we're going to continue to see Bitcoin and Ethereum and other cryptos go down because they are seen as risky assets. That's just a fact. Once all of that happens and everything kind of explodes in our economy, well, we might be in a recession. And that is going to be very tough for a lot of Americans. But there is light at the end of the tunnel. As things start to end, as all of those bad investments disappear and all of this demand is eliminated in our economy, well, that gives supply and inventory time to start going up. People can then start to go out and buy things because we have price stability, and wages will start to increase because businesses won't be taking on as many costs anymore. And hopefully, if you can see the supply chain issues from around the world begin to end, well, that could bring down inflation too. You gotta remember, our economy is not functioning how it should right now. We are not in a normal economy. It is not normal to see record highs for everything all the time. And remember, the bigger they are, the harder they fall. We are in the falling period right now, and I gotta be honest with you, the bottom is nowhere in sight just yet. This is why financial education and investing and knowing your money is more important than ever in 2022. Because if you don't know your money right now and you don't know how to handle your finances, well, then you could end up losing it all from the recession. Because truly, I hope that things get better in the United States. I hope our supply chain issues go down. I hope the Federal Reserve can lead us into a soft landing. I hope that the issues overseas go away as soon as possible. Again, I'm very hopeful that all of it is going to be in a positive light for all of us. But I still need to have a plan in place today in case it doesn't. And don't freak out, because there is definitely still time to learn how to manage your finances and prepare for a potential recession. Because in my opinion, I think that this everything crash is only just beginning. But now I want to hear from you on this issue. What do you think about this everything crash in the United States starting to happen right now? Do you think that we're headed for a recession and all of these markets and our economy are going to continue to crash in the future? Or do you think the inverse is going to happen? Our economy is going to grow in Q2 and in Q3 of 2022, and we're actually going to avoid a recession completely and be in a way better spot than we are right now, with every single market essentially recovering. Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.